Mary Jane McQuillen, ESG funds, or environmental, social, and governance funds, have really attracted a lot of attention and assets over the past few years. Why do you think this is so? What's driving it?
I think right now we're at a point in time when there's a confluence of factors driving the growth and the demand. For one part is the institutional marketplace, the CalPERS and the CalSTRS of the world. Many of the largest pension funds are asking about ESG as part of their investment process, as a part of their fiduciary duty, and so therefore they're also asking their institutional consultants. Also on the retail side, more and more individuals, in particular the millennials, have also been asking about ESG. They very much get it, so they don't have to be proven. It doesn't have to be proven the performance factor for them. They understand it. The older generations, they finally have years of evidence, decades of evidence that show that you don't necessarily have to give a performance.
And how does ClearBridge approach ESG investing? Do you do negative screens, positive screens? How do you do it?
ClearBridge has taken always a very fundamental approach, meaning that we integrate it at the fundamental level. So when it comes through the idea generation, we're looking at where the E, the environmental, the social, and the governance factors play in, sector by sector. So there is some negative screening in the sense that there are certain industries that our clients prefer not to invest in, say like tobacco, but it is also very much an integration of the value chain. So in other words, where are the opportunities, where are the risks? Our fundamental analysts at the sector level identify the ESG issues and they weight it by sector, because we understand that the issues that affect a technology company may not be the same that affect an energy company or a consumer staples company.
Can you talk about the way your Sustainability Leaders Fund is constructed? Maybe name a few stocks that are in there?
Sure. So top down, we go through the index universe of the Russell 3000, and we also look at international companies. We use our quantitative screens to find quality names, and quality in our view would be good return on capital, strong balance sheets, but also a very high commitment and demonstration of E, S, and G. And so some of the companies that you can imagine can range from the very large cap names, where they're in technology and industrials, but also in the smaller and mid cap names. So a company like Trex is one we like. It's a company that makes composite wood decking. It's got a very, very high brand in the marketplace, and it takes the waste stream of a recycled bottle or plastic bottles, and they recycle the bottles along with sawdust to make this composite decking for playgrounds, decks, benches, and it actually lasts longer than natural lumber. Other companies might include an Ecolab. And Ecolab is one of the world's largest hygienic sanitizing companies. So they go, and if you think of hotels and restaurants, they do the cleaning products for the sheets, the carpeting, but they also do a lot of food sanitation, and that's something that's a big issue for food safety going forward. As the population grows, you need to make sure that there's food safety in place and sanitization. That's where Ecolab comes in. I could give you another company. Another company is from Scandinavia called Novozymes, and that's a company that uses enzymes and microbes. So it helps with digestion, it helps with cleaning products, again, for laundry detergents and so on. But it definitely has an agricultural purpose, and that's an area that's going as well. That's more of a mid-cap name. The Trex was a small cap name. CVS is another name that we like a lot, which is a large cap name, as you know, and we think they are doing a great job in terms of health and wellness and really defining themselves in the mission of health and wellness delivery to their clients, to the customers. When they made the announcement that they were no longer going to sell tobacco, it was very much in alignment with the mission that the company had put out. And when we think about $170 billion a year spent in the U.S. on tobacco-related illnesses for medical costs, and then you think of the economic costs, which could be 150 to 170 as well billion a year, that's a lot of spending that's been done related around tobacco-related illnesses.
Definitely is. Thanks a lot, Mary Jane.
Yeah, thank you. Thanks for having me.